trying to figure out where to enter and where to set my stop, and where that makes sense, especially how much risk to take on to how much potential upside I see, whether it's going from the PTrans to the GEX level. That would be great. I'm just trying to use those levels as a way to enter and then, manage my stops.
Yeah, I mean, that makes perfect sense. I know, depending if you do intraday or short-term trading, obviously Paul has done extensive back testing on using the stops in the PTrans2PGEX portfolio, and we get that question probably weekly, I would say, Paul, don't we? At least I get it. I know you get it about we're not using stops. And it's something counter trend to what I learned. I mean, I came from IBD, I came from trend following, I came from using stops. So it took a little bit for me to get my head wrapped around it. But I also understood back testing. I understood distribution. I kind of all understood those statistics going into it. So it made sense. But it really depends on your trading style and what you're trying to accomplish. So that's why I get many questions about why are we not using stops on PTrans2PGEX. Well, it changes the distribution of the trading plan and the trading system. So once you start messing with that, you change the outcomes significantly. So that's the only reason kind of that. So I don't know. I mean, if you've looked at that and kind of understand that, then that kind of changes that. But if I'm intraday trading, I prefer to try and find stocks that have levels that are extremely close and price compression. So like 0GEX to PTrans, if I'm taking that trade for the day and then we violate 0GEX, I have no problem getting out of that. And actually, it's perfect because I know right away that I'm probably wrong because that 0GEX is that balance point between calls and puts. And obviously, if we're above it, then I'm leaning to the upside on call if it's call dominated, if it's a positive delta state. But as soon as we drop below 0GEX and start living below 0GEX, then I know that I'm probably wrong. So that's why I'll look for those trades that have those levels as close to possible. So I know right away that I'm out of the trade. If the 0GEX is, on Apple, let's just say it's 160 and the PTrans is, 175 or 180, and we're in the middle of that range, your risk reward is not that great. So then you're going to have to figure out where you're going to put your kind of stop, if you're using that type of trading plan. So anyway, hopefully that helps.
Yeah, very helpful. Thanks.
Yep.
Yeah, let's talk a little bit about that, because I mean the use of the gamma levels as areas to reference against for stops certainly is viable. So I think your quest is well made and well founded fundamentally. What I think many folks fail to appreciate, and I'm not intimating that this is you. I'm just saying in general, and I've been working with folks for a long time on this stuff, is they fail to understand what happens when they introduce stops. And Ewan Sinclair, I don't know if you know him in terms of authorship. He's got several books out, and he talks about position trading and volatility trading, and one of the chapters he talks about is what stops do, and stops fundamentally change the strategy. So what I've got on the screen here, I don't know if you can see it, but I've got the PTrans2PGEX strategy for 10 years or so. And this is the distribution of returns for that strategy. And it has a positive expectancy because the centroid, the bell curve of the distributions, is above the zero line, which is sitting right here. And the 50th percentile, which is your average, is actually sitting right about where I'm sitting right here. It's about 2%, 3%. So no stops, no nothing. You buy when you cross PTrans, you sell when you get up to PGEX, and you just hold your nose and go. Gives you this type of distribution. Now, if you're looking closely, you see that there's some positions here on the left-hand side which closed out a very, very low amount. 55% down, et cetera, whatever the case may be. Obviously not a very big number. There's only one of them in 10 years. There's another one down here at 52, et cetera, et cetera. My point being, this strategy will cause you to take heat. Taking heat, in my opinion, is the thing that causes people to abandon a strategy. It's not the gains. It's purely the heat that they take and their lack of confidence in themselves and lack of confidence in the system that they're trading. And so what a lot of people want to do is they want to put a stop loss in. And you can do that, right? If, IBD's famous Bill O'Neill 8% stop loss, I'm going to hit the run button here in a second. I want you to see how this distribution changes. Boom. All right. So I put an 8% loss in this system and stop loss in this system, which means that as the price falls, if it falls 8% or more, and there are a few that were more, right? You get the signal and then you exit on the next day. There's actually far more that hit that 8% spike than all of the peak distributions of all the other trades. And again, we're talking 2,219 trades in this system. And I don't know if you saw what happened with the number here. It basically halved, right? So just stepping back here again, when you introduce a stop into the system, you need to know this. You need to know what it's doing. So if you don't know what it's doing in your overall system, then you're effectively, you're hoping, and hope is not a strategy. It's not a viable strategy here, right? So we don't use stops, and our recommendation is that you size the position accordingly. And that, in that sense, especially with the win rate that's associated with this, 75% win rate, almost 76% win rate, compared to, by the way, let me turn this on so you can see it, now down to 65%, right? I take 10% off in the win rate by throwing an 8% in, but I have nearly half my P&L. It has a benefit, right? The stop loss removes heat from the portfolio, and you can see that portfolio heat, worst position here, 1452. I take the stop loss off and I run this thing again, 8,000, right? So clearly, a stop loss reduces heat in a portfolio, but it also kicks you out of those trades that would have recovered and gone on to give you gains within the overall system. And so the question always becomes, well, then what's the appropriate stop loss? Well, the appropriate stop loss is no stop loss for the PTrans2PGEX if your objective function is to maximize gains over a longer period of time. If your objective function is to reduce intra-trade drawdown, or what's called the maximum drawdown, MDD, well then stops, go ahead and introduce stops. And I presented some work down in one of the other channels this weekend that basically shows 5 to 8%, 4 to 8%, 4 to 5% could be the number, but be prepared for lots of sequential losses, because if you, and this is without the CT, I'm discussing this right now without the CT, and these results that I'm presenting right now are without the CT. So if you are to take these trades blindly and you're to put let's put a 5% in here, for instance, you can see what happens. It just skyrockets up. Again, for the percent change, actually, it's not a huge change in the overall performance. And the nice thing about this with a 5% stop loss in this is we've actually even further reduced the drawdown. So if your objective function is to not take heat, and worst case maximum adverse excursion, that's your intra-trade heat. The worst case was 15%. And you're probably saying, well, wait a second, you had an 8% stop loss. Well, things when they gap down below your stop loss, you're taking the price below your stop loss. And so if you are in a stock that gaps down, you're just locking in that low number, and that's what this is reflective of, is that 15%. But that's a heck of a lot better than having no stop losses at all. And as you saw in the other distribution, it was pretty high. So I think there are other things that I played with or am playing with right now, and one of them that just to kind of tease where this is going, NGEX as a stop is a very interesting level. And there's a couple reasons why I think there's a pony there for us to look at. The first thing is this. If we're playing a strategy that is 0 to PGEX or PTrans2PGEX, we're playing in a world where we presume we are call dominated. And so the left-hand plane being fully in the money call dominated, no out of the money puts to speak of. There's certainly not in dominance. And then the right-hand plane, pure out of the money speculation. We're seeing plus GEX advance up, et cetera, prices moving up, all the things that would pull us into this stock. Instead of saying I'm going to put a fixed 5% or a fixed 8%, what if I said, if this stock just goes off the rails and we go back into a put dominated environment, do I get out? The short answer appears maybe. And it's either going to be using POI, the put open interest, which is not a gamma related number, or it's going to be NGEX. I'm still working on some of the testing. I didn't get it completed today. But if you're going to front run me a little bit, I would focus your attention on sizing so that your entry minus NGEX is that span would be your at-risk amount, and then use that as your basis going forward. And I think you might be surprised at just how good that is or how it works as you go forward. So I'll leave it at that, but I'll, in the next week or two, I'll present some results based on that NGEX use of a integrated sell criteria. It's not necessarily a stop per se, but it's if you go above PGEX, you get out. If you go below NGEX, you get out. It's that kind of that same thing, and I think you'll find the risk reward is pretty good.
That's very helpful. Thanks. And I think when you reran that chart and showed if you got out at 8% or whatever the first one was, and it takes down your winning percentage, I think that reflects what I've seen in my trading account. It's so hard it's like running up a sand hill, right? So it's so hard to get the wins to be significant enough to have offset all those trades that you got out of. So that was very helpful to see that. Thank you. And I look forward to whatever you might, run in the future here. So thanks.
Yeah, sure. And let me just pile on while we're talking about this. I know we're over 9 o'clock, but this is something that's near and dear to my heart. So if I turn the stop off and we just get back to the PTrans2PGEX, if you look down here, these are the gains and the losses of the systems, of the trades, of the individual trades, right? So they are what they are. In terms of what's called a series run, a series run is the consecutive numbers that you have of winners before you have a loser, or the consecutive number of losers that you would have before you have a winner, right? And you can see it's 24-9, right? So over the last 10 and a half years using PTrans2PGEX as a strategy, they're the longest 24-9 occurs. Now, if I turn that 8% stop loss on, and 8% is completely arbitrary, you now see I'm 25 and 24. So the point here isn't that they're 25 and 24. The point is, are you prepared as a trader to stick with a strategy where you've had 23 consecutive losses? I'm willing to bet if it were me, I would be really challenged. I can't speak for you. But in my working with others over many years of doing this, this is the psychology of trading. And Taylor called me out actually when we were doing this because it doesn't have a stop loss. And he said, we got to have a stop loss in this. And I understand you've got to have a stop loss, but I just introduced an 8% stop loss. And if Taylor's skilled, a lot of us here are skilled, and we're prepared to take 23, one less than our maximum we've ever seen. Many of us are not. We don't appreciate what that means, what happens when we introduce a loss. So what we've elected, I'm going to open the kimono here a little bit. What we've elected to do is focus on the win rate. Get the endorphins rolling, right? Sure, the gains aren't stellar, and you do take heat, no question about it, right? A position over that 10 years, this is percentage, so it grows, but you do take heat. But the point is, is try to reinforce the overall system so you get into a mode of correct position sizing, of knowing what consecutive winners feels like and what consecutive losers looks like, and how to take heat. Mike and I are doing this strategy right now in real time, and we're taking heat, or we took heat up until last week. No question about it. And if you're not properly sized, you'll be out, because people can't take heat. They lose confidence in whatever they're doing. But if you size so that you can take the heat, which is what we want folks to think through, then I think you can start feeling what it looks like here and say, okay, I'm willing to give up 75% for 65% if I put a loss in here to reduce some of the heat I take in the portfolio. And in doing so, I know I'm changing the distribution of returns, but I'm happy to live with that because I'm taking less heat. There's a whole group of traders out there who feel very comfortable trading the 8% stop in a winning, with a positive expectancy system, right? This is, I didn't even point this out. This is called a positive expectancy system because the 50th percentile is above the zero line. If you trade this system over a large number of trades, historically, of course, and the past is no guarantee of the future, all of that, which is very true. But this has a positive expectancy. You will make money, and you'll make solid money with this, right? It's consistent 2-3% over a large number of trades, right? So you'll be able to absorb these losses. The problem is sometimes when you introduce a loss, or introduce a stop loss, you actually shift this peak to the left. You want to see an example of that? Let's go down to 3% or 2%. I'm just going to I didn't really do it here. There are trades where the majority of the trades end up being to the left of the line. The PTrans2PGEX strategy is a pretty sound strategy, so it doesn't do that. I can't generate that here, but there are other strategies I've tested where it just literally collapses to the left of the line. So it's not, you have a very, very difficult time trading that, and you lose your expectancy on the system. So your stop loss changes the overall characteristics of the system as well as the equity of the system that you end up with. But you could say, here's 13%. All right, now I'm getting into an area where I can still have good gains. I've got my 50th percentile, et cetera, et cetera. So you can see how this, how this can play out. It just depends on what you're shooting for. I know a lot of folks, though, as Mike said, he's an IBD trader. IBD can slim. We're all, we have that many of us have that background. And Bill O'Neill taught us 8% stop loss. And you see what an 8% stop loss does. So.